Right, good evening, everybody, and very warm welcome to our webinar. That's a first. For those of you actually logging on, if you can maybe just tell us where you're from. And it's nice to know, just to get a feel from which area of South Africa you're from. As I said, this particular webinar is a first, certainly from a property ownership perspective. We're going to be looking at property solutions for owners and owners of property. We hope that you are owners of property, but we're doing it with a difference for those who are a little bit financially distressed. But I'll get into that right now. So for those of you who don't know me, my name's Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor. We've been around for 19 years serving the real estate industry. We've got a daily news platform, a magazine. We run webinars of all different types, different topics on an ongoing basis, interviews, etc. So please join us for that. And we're hosting this particular event in conjunction with Real Estate Assist. And I'm going to introduce you shortly to our panelists over here. And but I think this particular conversation is a critical one, which we need to have. And I think really the objective here is to get to solutions and to look at the different options that we have for those particular solutions. And what are the considerations? So if you own a property and you're under a little bit of cash flow pressure and you've had finance decline, or you're possibly blacklisted, or you could even be under debt review, and you need to unlock some equity, then you're in the right place. And or you've had a property that's possibly, we're sitting in a legal situation. So we're going to really go behind the headlines, behind the data, and we are seeing that there is a growing number of property owners that are under severe pressure, whether it's financially, emotionally. Many cases, because of that situation, they're very unsure what to do next. Where do they turn? Who do they go to? And I think that's really what we'll discuss tonight. So we've seen some of the pressure points where property ownership breaks down. And normally it's when there's interest rate hikes. We see market shifts like we're seeing right now with the war in the Middle East. Or we see rising utilities and operating expenses, probably over leveraging, which is quite a big one, maintenance and repair costs, which are unforeseen, and then, of course, vacancies and rental defaults. So this is really the reality of investing in property. And I think there's multiple pressures that hit you all at once. So therefore, we know that whether you were in a strong financial position before, because of these reasons, you could possibly be coming under strain. So we've seen the cycle before. It happens on an ongoing basis. I mean, you just look at how macro markets move. I mean, it's often beyond our own control. We saw in 1998 interest rates reach 25.5%. We saw in the global financial crisis, 2008, where obviously a lot of mortgages went under, interest rates shot up, lots of vacancy, lots of owners that were over leveraged, couldn't sell their properties even for half the value that they bought them for. And we had, of course, a big mortgage crisis, and it was a global one. And then, of course, we had COVID in 2020, just around the corner. And now we've got renewed sort of pressure. So so we've got to deal with all these different pressures. And today is really solutions focused. Absolutely. And we've got our team over here, which are really looking forward to. I'll introduce to you shortly. And we know when the pressure builds, the system moves very fast, don't we?
Yeah.
Don't we? So you miss a few mortgage payments, your bond payments, and suddenly the process escalates very quickly. I mean, you get letters of demand and Section 129 notices, credit bureau listings, legal action, and this could also result in sale in execution or property going on auction. We could lose your home or your property. So really, we're going to be looking at those kind of solutions today. And I want to quote a Benjamin Franklin. It's a very apt quote which he made, and he said, "Credit is a system whereby a person who can't pay gets another person who can't pay to guarantee that he can pay." So really, that's how Benjamin Franklin, he's on the $100 bill, and this is a message that he put, is how the credit system is put on. So very interesting way. So that's why we've got to make sure that our affordability is good at any given time. So that's a hard truth. Most people only discover their options when it's already too late. So today is really about changing that situation. We're going to unpack why the situation is becoming more common, what options are actually available, and what exists beyond the banks. And most importantly, property owners can take back control before it's too late, because that's what we want to get everybody in a position of control again. So without further ado, I'm going to introduce you to our panel from left to right. We've got Daniel Lombard. He's the founder and chairman of Real Estate Assist. And he's also the big host of putting on this webinar for you, the property owner, for the very first time. Do you want to give a shout out to the audience there, Daniel? Maybe just tell us.
Hi, real estate owners. Yeah, welcome for tonight. I'm very, very excited because, you know, when you always have a vision of something that you're planning, and we strategized many years ago that one day we want to have a webinar for real estate owners because we look after the interest of the real estate investor in the process and so forth. But a lot of the words, the one thing that I hate to hear and don't like at all is when an owner says, "Oh, if I only knew about this a year ago."
Yeah.
You know, it is really something that I don't want to hear. And I hope I can change that perspective tonight and for a lot of owners. And it just want to say it's not all about just the guy who is really in trouble 2 weeks before his auction, or for the person who just can't access necessarily equity from his existing property or properties to address certain needs. You know, so it's the whole spectrum. And I think tonight, hopefully, you can learn a few things that will help you to be proactive and stop those actions in the perfect time.
Okay, wonderful. Thanks, Daniel. And then, of course, we've got two additional special guests. The first one is Henko Malana. He's of the Pelser Group, a state agency. So maybe you want to tell us a little bit about yourself and the Pelser Group there, Henko. Welcome to you.
Oh, well, thank you very much for allowing me to be here tonight, and for all your gracious time today to allow us to be here. When I got the opportunity to be part of this, I just jumped to this from all the way from Gauteng, and I present the Pelser Real Estate Group, but I also represent real estate agents in today's life and the challenges they have on a day-to-day basis. I'm a very passionate person and I like to give value to people and try to change people's lives forever. I mean, it's not like you're buying a bread, you're buying a house, you know, so there's a lot of implications there. And in a very short 2-minute, 5-minute interview, you already know what is this deal going to go from where you stand. And, you know, does this person really need their house to be sold, or do they actually need financial assistance? And to me, when I heard about this wonderful opportunity and knowing that our work actually influences people on a daily basis, I'd love to be part of this and make sure that I can actually bring this service to my clients.
Excellent. Wonderful. Be a great service. Second guest is Sean Rodame, is the CEO of Multinet Home Loans. And I mean, they're independent mortgage originator here in South Africa. Great to have you on the show.
Thank you, Neil. It's good to be here. Second time I'm in the studio, so it's fantastic to be able to talk to the audience, to have some questions come through about finance and about pre-qualifications. How do you know what you can afford and when you can afford it. So interesting conversation tonight.
Absolutely. Great.
Looking forward.
So wonderful to have you all on board. But just to our audience out there, please, if you want to ask questions at any stage, please drop that into the Q&A box. So there is a Q&A box, not the chat box. The chat box is just for general comments. There is a Q&A box. Just drop the question. So if there's something that pops up immediately, please send the questions. We've got a 30-minute session right at the end where we're going to tackle all of your questions. We'll go through every single question that you have sent to us. So please, we need that engagement. We want that engagement. It's very important, and we're here to actually help and give you a solution. So first of all, we're going to move on to Daniel, and he's going to really tell us about the Real Assist story. So Daniel, let's just start at the beginning, at the with the foundation of where did Real Estate Assist all begin?
Yeah.
And I mean, just give us a background, how it was established, and also the scale of impact that you've done so far.
Okay, thanks, Neil. Yeah, I think my story, a lot of people on the investment side knows it well, because we want to ensure that people understand why we're in this business. So, and I think I was coming down from Gauteng, and my son was like about 5 years old, and said, oh, I have to slow down a bit, and I have to do a bit less and spend more time with him, because I was working like all Joburgers and Gautengers, probably in the rat race, not spending enough time at home. And we came down here in 92. I started buying property on auction, sale and execution specifically. And through that time, when the interest rate jumped to, like you mentioned, to 24%, in that timeline, auctions were still held at the properties, sale and executions, not at the sheriff's office like they do it these days. And you had to look the owners in the eyes every time that you're at these auctions, and obviously experiencing the destructive social breakdown of the family environment. When you have to lose your home, it's not a easy thing for people to experience. And it was easy for me to just say, okay, but if I don't buy it on the auction, then the next guy is going to buy. So you justify it for a few years until you don't sleep so well anymore. And then you get to the point where you realize there must be a better way. There must be, a lot of these people are not even, they may have a lot of equity. It's a real estate owner, have a lot of equity in his property, everything, but just the fact that he's in arrears for a certain stage means that his property is going to be sold on auction. He's going to lose a lot of equity, because we all know sale and executions, the average is about 55% to 60% of market value. So all that, on top of that, there will be a loss of that. And it also creates lots of issues within the family, etc. And seeing that for a few years made me come to the point where I realized there must be a better way. And there can be a way that an investor, or with the right capital input, that the owner can be assisted, and that he can recover within a certain period of time and maybe keep his property, that type of thing. So we started developing these products, and fantastic at 2000, when the interest rate dropped again to 11%, all our products were ready. But there was no market, because every secretary could afford to buy a house those days, because the money was so easily available. And then what came in the NCA, the National Credit Act, came into play in 2007, 2008. Economic crisis took place, and we were very fortunate that our products at that stage were ready, actually prepared previously for that, and now we could start implementing. And we did so on a very low scale, from 2008 to 2012, where we've designed these solutions. But we had, because there was nobody else doing it, we had to go to the point where we have to test it, and we did that. And by 2013, we established that the property assist at that stage, and later changed to assist group, where we actually saw that we can do this. And there's actually a huge industry existing behind the scenes that we don't always see or understand. And I think for me, that is really where it came about. And I decided that if we can do transactions where it's a win-win for every party, and that is the key of what we do. If it's not a win-win, we'd rather walk away. So everybody needs to have a benefit out of the transactions. And up to date, we've helped about 320 real estate owners with more than about 400 million rands worth of transactions. But we realized that the market was substantially more than that. It's actually, if you're in this position, or you even just want to unlock equity or whatever, there's that total number of clients that can't access the mortgages, this money through mortgages, etc., is so huge that it is really quite an amazing, that you must definitely not feel alone. You're part of at least 100,000 families, to give you an idea.
Yeah, absolutely. So let's just unpack a little bit more, because it's very important to understand why this market exists. I mean, let's really get to the bottom of the problem here, because I mean, we're seeing more homeowners under pressure. I don't know whether they're going to show some stats, but it's significant. And so we don't realize that, at the end of the day, we've got to pay back the banks. At the end of the day, it's not a matter of just, you afford it today, but tomorrow something happens.
Exactly.
And so let's talk about even, those that have got equity in their houses. I mean, and even though they've got equity, they're under financial stress. So I mean, that's a bit of a contradiction.
Yeah.
So maybe talk a little bit about why this gap actually exists, where the traditional banks generally can't assist them. Many people don't understand it. They say, banks tend to give you an umbrella when the sun shines, and they take it away when it rains. So, and it's kind of like, you would expect that there would be that kind of support, but there tends to be the opposite kind of effect, even when there's value in the property. So maybe just unpack this a little bit more.
I think the key comes in, and Sean can support me a bit there. From a bank's perspective, when the National Credit Act came into play, it was actually at the perfect time, because it saved a lot of people in the 2008 economic crisis. I think what happened, though, after that was a bit of a challenge, because the criteria for approval of a mortgage or assistance or lending or whatever on the financial side was capped, in the sense, it was a much more stricter criteria, etc., because of the National Credit Act. And then at the same time, the only challenge was that banks was able to lend money on short-term debt that didn't fall under that same criteria. So short-term debt was much easier accessible than mortgages. And I'm sure the banks didn't plan it that way, but that's what came from it. And if I show you a bit of stats. So the bottom line is, from the time that the National Credit Act was implemented, even if the bank wants to help you, apart from all the banks have got, when you run an arrears, they have got programs. Every single bank has got that. And it varies from restructuring, this and that and that. But the moment that you default from that restructuring plan, the bank can't assist you anymore. And that became a real issue. So they then started to assist you sales and those type of things, mandated sales from the banks, etc., to try and help real estate owners, because they cannot lend money to them. It is against the National Credit Act. If you are in debt, you have defaulted, then there's not enough motivation from the bank to actually assist you in that case. So I think that is a big issue. And then obviously, so from the time that default happens, or we call it 3 months or more in arrears, up to the date of sale and execution, or somebody who just want to unlock equity, but have 1 or 2 impairments on your credit record, you are not able to lend money. You're not allowed to lend money because it will be reckless lending. So in that case, who helps you in that situation?
Exactly.
Who can help you? Nobody, according to the law, except if you sell your property or you do a property transaction. Like in our case, we do structured property transactions to unlock that equity, but with certain criteria and things that happen in the process. So if you look at the stats here, this is a very good history of mortgage debt, etc. So if you look from 2007, the 90 days or more people in arrears was 19.78 billion rand. Okay. At about, what is it, 10 years later, 12 years later, you'll see it nearly not even doubled. But then you look on your right-hand side on that column, 2007, the short-term debt, and this is only 6 months debt. I'm talking short-term 6 months debt that you had to repay in a 6 months term. This is not the total short-term debt. That's actually astronomically more higher figures. But just for this, the short-term debt was up till 2014, which was 7 years later, 8 times more. So it shows you the problem that arises. And today, when we get applications, 90% of our applications is people who's now got a lot of short-term debt, and due to the short-term debt can't lend through a mortgage or other, because they overexposed for that they have to pay monthly. So the net income is not enough, or exposable income, like you guys call it, are not enough to actually do that. But if you look at the stats today and you see the need, so that's why I said you don't have to feel alone. If you look at the right-hand side of that page that we're sharing, that's going to come up now, you'll see that 92 billion rands worth of mortgages, which is 99,000 mortgages, loans. Okay, and this is just the residential home loans. Gives you the idea of how many people are really in need of assistance. So if you look at that, it's really a high number. It's a far bigger market than we can ever imagine. And these days, and this is why I'm glad this friend of ours here with the estate agencies is here and understand you can't be a normal estate agent these days, because a certain number out of every transaction is possibly somebody that needs assistance, and they don't necessarily need to sell. And if the only get out of jail card is, oh, I have to sell my property, without having the opportunity to keep it. We don't want people to, a country's foundation is a lot of times you own property. You don't burn stuff that you own, So you want people to keep their homes, and that is something that we work towards. So I think that gives a bit of the stats on that. I hope
absolutely.
It's a bit clear.
No, it does.
Yeah.
So Henke, going to bring you in here now. Actually, I want to tell a personal story of 2 property sales, one in Gauteng and one in Cape Town. 2 people, one's a family member, one's a very good friend of mine. The friend of mine in Johannesburg bought a property in end of 2014 in Rand Park Ridge for 2.8 million rands, 4-bedroom, 3-bath house. And he spent 2, and he sold it last month for the grand sum of 2.4 million.
Sure.
He did want to buy up, of course. He's obviously in the water for 400,000. And then, of course, my brother-in-law, he bought his house in 1990 for 75,000 rand in Claremont, in Cape Town. He just sold it for the grand sum of 7.5 million rand. 4-bedroom, three bath house, identical property in different locations. And if you look at it, it's a year-on-year 15%. I think it's 1,000% return over that. So just
Unbelievable.
It is unbelievable, isn't it? It's great. And so I just wanted to demonstrate that that little example of the two
The
markets.
two opposite points of the table.
Absolutely. So Hinke, I mean, you're in Gauteng, but you also got a national footprint.
And our agency works all over. Myself and some of my colleagues works on commercials, and sometimes we are in Cape Town, Durban, we're all over the place. And we do residentials and all these kinds of things as well. But I'm so happy with what you just said. We work in a very dynamic industry.
Yeah.
Whatever happens in the financial sector shows in the house sector the next month.
Yes.
And gratefully and rightfully what you guys said, and I'm sure you can back me up on that as well. The moment there's a distress, you actually have a family dysfunction. You get a situation where it becomes like a total bomb, and you're walking there as a real estate agent. And I have to say this before I go on. Our main focus is to sell houses. And I don't want to sit here and think, like we're not selling houses. It's really, no, we are selling houses, but in so many cases, and I can be honest with you guys, if you look at the stats that you gave me, it's just like a total verification of what I see in the field. I mean, you get the people that actually phones me to buy a house from 40 upwards % actually do buy a house. So then we started doing background checks and seeing if they are qualified and can they get a house. And then they start talking to you. Do you really think I can get this house? And you're like, look at these guys, and you really think you can see the dream in their eyes. But sometimes in 2 minutes' time, you actually see that things are going south. And the sale is not going to be the solution. And for us in this industry, just to think that you can help 3 or 4 times more people that you could normally have help as an estate agent, because we in the service delivery industry, that's the only thing we're doing. So to have another tool to be able to assist somebody that can come back rehabilitated and still help them to either sell or do whatever is like an absolute amen to us. It's like what we need in this industry. The fact that we have been stagnated in this old kind of fashion of real estate is really a time that we actually look at different points of view and different attack points to actually address this kind of situation. I mean, we're sitting at over 60% of people that hasn't got jobs. Just look at that in everyday's lifestyle. Normally, there's a man and a woman working together and they can get to their 67,000 rand lifestyle, but man loses his job, and then, or the woman loses their job, and all of a sudden you have to stand and help there from our point of view. And it's such a privilege, and it's such a humble place to say to somebody like, let me help you. As an estate agent, I'm not always there to sell your house. I'm there to help you. I'm really there to see what I can do to make life better, because I only have a reputation. That's so I'm trying to keep it good. So in short, and it's this, I mean, look at the figures. We've done over 250 billion rands of equity and economy in the country last just us. It's a big sector of the country,
Yeah. No, absolutely.
So
what are you seeing on the ground? I mean, are you seeing some distress? Are you seeing people?
Absolutely, on a daily basis. To give you a bit of example, if my time allows me to, there's a lady that phoned me last week, the week before last week. She told me about this terrible situation where she had an accident, medical bills, her medical aid didn't pay the full bills. She's a single mother, 3 children, and she has to sell her house for over 380,000 rand of medical bills. And there's no way I can sell her house. That's not her solution. And that's where people like you come in and listen, let's see what we can do to assist this person. Should they really want to sell their house, not out of desperation, that's a different thing. And people don't look at equity as business as well. They don't look at it as a place where you can actually make money as well. So we're really in a place where we're trying to change people's minds about property and trying to put people into the right perspective of the new age. it's, I said to you earlier, this long days, it's gone having a show house every Sunday. Like, let me just do my show house.
Right.
That's not where the property industry is moving these days, especially if you look at tech.
Yeah. Okay. Excellent. So Daniel, coming back to you, let's sort of unpack a little bit who's this for here, because let's get specific. Let's sort of unpack and you know, why are the property owners, you know, I mean, what is it that they can benefit? Who are they? Who are the property owners that can benefit? I mean, let's look at
Yeah,
the
I
options.
think
Yeah.
I think for starters, what you mentioned, Henko, is the estate agent arrives at Mr. ABC, who at this stage thinks that his only option is to probably sell his house. I just think, and I used the example when I explained to you earlier today as well. When I used to call people who properties were on sale and execution, I would call and the person will say, "Oh, sorry, man, you're the 12th guy that called." And I said, "Can I just ask one question? Has anybody asked you if you want to keep your property?" And they say, "No, when do you want to see me?" Okay. And that was the difference. Because if an estate agency these days are just doing that,
You will not.
and you know, we had, I don't want to call the agency's name, we had somebody here in Cape Town and Kuils River area. This agent literally did that. Okay, they let us know, here's somebody that needs to be assisted. I at least got about 5 people monthly that they sent to me, and that was not even when we were in the position that we are today. And if we look at that, and how much mileage they got from those people, but who are you going to phone next time? You think when you actually want to sell your house, you're going to phone all the guys that told you have to sell your house, it's the only way out for you, or would it be the person that actually assisted you? You know, and I think those type of things go just a bit further. Okay. So from our perspective, if you look at the next slide that we've got there, is who can be assisted. So I'm going to give a real summary overview today. I'm not going to go too much into the detail of the various products, etc. But I'm going to explain typically who can be assisted. So if you look at, first of all, there's a lot of clients that's not really, if I can call it, in trouble in the sense of that their house is going to go on auction, or that they're not there yet, or anything like that. They're just people that, due to the National Credit Act and the criteria of the banks, etc., can't go today and unlock equity. Okay. Now, I want to tell you that your property is a valuable asset that you can use to unlock that equity. You must be prepared to do certain type of structured property transactions, because people can't lend you money. And I say it to so many clients. They sit there and say, "Okay, but so how much can you lend me?" I say, "I can lend you nothing." "Okay, but why am I here?" "But I can unlock equity for you through a structured property transaction. That I can do." And that is very important to say at this stage. So anybody who needs to unlock equity, want to consolidate debt, address personal needs, whatever the reason is, like you mentioned on the medical thing. I mean, I experience that regularly, that suddenly the person who wants to unlock certain equity can't do it because they have used short-term debt, because they thought that the medical cost will probably end up there, and then it runs up higher. Or somebody who wanted to build on quickly, instead of, because it's a long teething process to get the mortgage, they take a shortcut, use some equity in a short-term debt, and on the end, when they go to the bank and say, "Now I want," to say, "Okay, but now you don't have affordability, so I can't help you anymore." So that's, I would say, the first type of client that we have. If we move to the next one, it is real estate owners who really want to keep their property, want to recover, and on the end of the day, keep their home and not have to sell it if that if they're in the position to do so. Now, very important with that is you can be running in arrears, you can have summonses. It doesn't exclude you. I mean, we stopped sale and executions. That was 2 weeks. I mean, our record is 2 days before the time, but please, let's avoid those kind of situations, please, because that's really rush hour things and not really the way to do that. When you get your first letter of demand, that type of thing, and you're 3 months in arrears, and the bank, and you defaulted on a bank arrangement or whatever, that is the time to call, so that we can be proactive, stop these actions, and start working on your recovery process for that specific thing. And that's for people who wants to keep their property. If we move to the next one, everybody, guys, are not in a position to always keep their property. And we will not help people. The Afrikaans saying is probably putting it the best saying, ons help nie mense van die wal af in die sloot nie, né? So we don't do that. We will not tell you that you can keep your property if it's just going to be some extension of the disaster taking place in the future. We will just buy you the necessary time, make sure that we can maximize your proceeds by, for instance, improving your property, spend 50 or 100,000 on the maintenance, getting 500,000 more for the property. So we actually, the cost to that is actually minimal. So those type of things. If there's critical debts and people are harassing you and those type of things, and you are actually in the process or want to sell, but you want to unlock some of that equity beforehand to address these creditors, those type of things, or stop legal action, and that is obviously very important. Stop it early in the process, because every time that the bank's attorney sends you a letter, the cost rise. And those type of things you want to avoid on the end of the day. So I think in summary, those are the different type of solutions that we can offer.
Excellent. Good. So Sean, obviously I want to start unpacking on the mortgage decline realities. I mean, let's sort of unpack the numbers a little bit, because we're seeing a decline in advances on mortgages. Maybe just describe that, just what's actually going on.
Yeah, so I think what you need to understand is that consumers have the ability to pay a higher mortgage amount, but because he's in such personal loan debt, he can't get out of the personal loan debt without actually having a massive amount of capital to settle that debt. So, you get into the situation, what Daniel explained is that you now had to take a personal loan to pay whatever emergencies there were. Now, when you're in that process, to try and settle that, to be able to access equity in your property is almost impossible. And unfortunately, it just spirals from there. And we've seen a lot of consumers get to a point where, but I can get the equity. I know that I can afford another 500,000, which is maybe 5,000 Rand a month to cover my personal loans. But my personal loans are costing me 35,000 Rand for the same amount of equity, but I can't get out of them. And unfortunately, they just continue growing until they get handed over or someone buys the book, and they try and squeeze you for as much as they can to a point where you have to sell your property and lose the equity just to cover the personal loans. So I think the product that the Assist Group helps the consumer with is exactly that. Let's see how we can get a investor or help you with your profile to unlock that additional equity in your property. You might have to pay a little bit for it, but you're not paying the exorbitant fees that you would in the past. So decline-wise on the question, we're seeing about a 30% outright decline from the banks. So not massive. Sometimes it's because the property value isn't there. Could be the industry that you're in. You can imagine if you were working in the motor industry, in the PE area, even though you can afford, we can see that there will be trouble. A lot of layoffs. I heard the new Chinese manufacturer is going to build a new factory then. I was very excited for the factory workers until I heard that most of it's going to be electronic. And, and all machine driven. So that has an impact. But when it comes to the further advances, it's very much consumers need help to be able to get out of that personal loan debt, that hole, and access the equity in their property.
And I think it's also exacerbated by what's happening now in the Middle East, because inflationary pressures are now putting the consumer on personal expenses. So fuel prices going up, with that goes food prices and all the associated costs. So the challenge to the mortgage is exactly how you've described.
Yeah.
Is all the other associated expenses, your credit card debts, your store cards, your whatever. There's a whole lot of other bad debt which is around there.
Okay.
So yeah, thanks for clarifying that. So I think, Daniel, let's get a little bit more practical. I mean, people are looking for solutions out here. So they would like to know. So maybe take us through some of the solutions that people can look at. And once again, I'll say to you, the audience, please pop into the Q&A box. If you've got some questions, we're going to deal with them at the end. Don't be shy. There's no such thing as a stupid question. We need you to participate in this one and give us your feedback. We're here to help you here today. So maybe just take us through those different options that the homeowner has.
Yeah, I think today, as I said, it's our introduction webinar. So I'm not going to try and go through every single product, but what I've decided to do is give you an outline of the typical type of client. What will the benefits be in our product? And then show actual figures of an example of something like that, which we find, if I can call it, regularly in our applications. That will obviously help a bit. Now, the first thing that I want to share is the fact that there's actually only two options. If you really think about it, there's two options. The one is to keep your property, all right? So it will be some structured transaction where, on the end of the day, after the term, and we've dealt with your transaction, that you will own your property, and on the end of the day, we're able to keep it. So that is obviously number one. And hopefully, in most cases, as far as possible, that's our goal as well, to help the real estate owner to do that. The second one is, obviously, everybody can't keep their house. Okay, but let's maximize what we can do with that property that we have to sell. Don't sell under duress. You will always get a lower price. The first thing is fear. And a lot of people sit with that situation where they feel, okay, I've got a problem here. I have to sell this house quickly. And that is exactly where the problem comes, because you now get into a rush. You're in a corner. You think there's no solution. Trust me, there is solutions. Okay. And we can help you with those type of situations. So I'm going to just use start with the first, if I could call it a structured property transaction, whereby you'll see that the investor will, in that case, purchase the property at a discounted value. And I'm just going to use examples a bit later on the figure. So don't worry that you don't understand it now. Just go through the simplicity of the process. Then secondly, the owner can then, either depending on each situation is obviously different. So there's normally two things that can happen. The owner can immediately repurchase the property on an installment sale basis, which means that the ownership, although it shifts to the real estate investor, on the end of the day, immediately that record will take simultaneously on the transfer to that client, that investor that's assisting you, will at the same date be registered as a recordal that you are buying back, but it gives you the time to do that. The other options, which is more for a client who doesn't qualify immediately, can rent the property, buy it back at a predetermined value. So for argument's sake, if we buy your R1 million property, and I'm just using figures, for 500,000 Rand, you will buy it back at 550,000 in a year, or 575 or 600 in 2 years. So you will never pay market value for that property, for instance, again, to own it again. But during that time, you stay in that position, you are assisted in the process. We walk a road with you, make sure that you clear your credit score. And on the end of the day, you go back to the mortgage market, but at a discounted value, and buying your property back on the end of the day. That is specifically for property transactions where there is enough equity in your property. Obviously, if your mortgage, and we deal with that often, where your mortgage may be the same as the market value. Then we will go to what we call bank offers, things like that, where the bank have to write off an amount of money, or we may have to sign the acknowledgement of debt for a balance, those type of things. So each situation is different, and every person's situation will be treated on merit of your situation as you are, because they are never the same, although the principle is the same. And if we look at then what benefits are you for the owner in this kind of situation, provide peace of mind. First of all, stop the legal action, stop the actions that there may be for selling your property, stop the social and financial distress in the situation. We will negotiate the bank's discounts if there's anything. We will then walk the road with you, staying in the same property, making sure that nothing changed actually, if I can call it on the surface, but a lot will change in the process, because your credit score will be sorted, your debt will be sorted, and all those type of things will change your total package to something very positive. And a lot of these clients have actually become real estate investors with us on the end of the day. And I think that's the key, where we want to take you from that position to a position where you are in a financially better state. So if we look at the figures here on the next slide, then you'll see that this is a typical owner that's been assisted. In this case, his property was worth 1.6 million. Current bond was 510. Now, this is a typical one, Sean, where you can see what happened here. In this case, he added something to his property. He built it with short-term debt because he thought, tomorrow I'm going to go and get a mortgage. And then it grew as normal. Unfortunately, building doesn't always stop where you think, and it goes a bit further than planned. And suddenly, he was sitting with 550,000 short-term debt. Their monthly income in total was 87,000 rand a month. But there was 56,000 rand a month. The expenses at that stage, due to the short-term debt, was 87,000 rand a month. And I won't say which bank, but I was with the bank top legal team, spoke to them, said, can we help this guy? And their words were, sorry, he's over the cliff, we can't. Okay. So he had a shortfall of 30,000 rand a month on his cash flow, which is substantial.
It is.
Okay. So then what did we do? We brought a solution where the investor purchased that property for 1.1 million, substantially lower than the market value of 1.6 at that stage. The money that was, apart from the settlement of the mortgage, which we did, and the maintenance, the balance of the money was used. We got a huge discount on settlement of debt. So the client walked out there, no further debt. 2 years later, the property was 1.91 million. He took a mortgage of 1.280. That includes the investor's returns and everything, and cost him 12,000 rand a month. For that, add all his other expenses, living expenses, and he cleared 17,000 rand a month net income after we helped him. And I think that, for me, is a typical solution that we're talking about. So what is his status today? On the end of the day, if we go to the next slide, you'll see there that his net equity rised from 530 to 635. Now you'll see that is less than what the actual value of the property have grown, because there's costs to this. Like Sean said, it's cost, but it's for a short term, and you can finish that cost, run it in that time period, get back to the I call it the lesser expensive money again by using a mortgage. The investor did very well. He made a good return on the end of the day. But if you take the equity growth from 1,650 in 2 years to 1,915 on the end of the day, and you take the cost of the transaction, it actually cost the client nothing. He just sacrificed, in this case, some equity, but at the same time, no more debt, short-term debt, got one mortgage that he have to pay, covers all his expenses, and that's the solution.
Mm.
You know, so that's typical a transaction of somebody who wants to keep their home that wasn't in distress, that would have lost their house on a sale and execution.
Okay.
Yeah.
There's one question I have, and it's related to the acknowledgement of debt. And I'll before I get to Sean, because first of all, we've got a situation, there's a shortfall of somebody on a bond. They need to sell the property and say they need to pay back 500,000 rand on the property. First of all, it was in a secure situation. It was asset backed by the house. Now all of a sudden, you sell and you're 500,000 rand short. You need to sign a personal loan, but you can't get a loan in the first place. So they're
Interesting, huh?
enforcing a loan on you.
Yes.
So they're actually putting that situation. I mean, banks say they're not in the risk business. They're putting themselves at massive risk, putting in that scenario. Oh no, you're going to pay, and that person's already underwater. Well, just comment. I mean,
I think I like Sean who understands the bank concept, to speak about the part of what they do with the money, with the debt. Okay, because that I'm not going to get involved. But my side of it is what we do is, in all those cases we negotiate the acknowledgement of debt. So what we do it on behalf of the client, because they don't have the knowledge, we will go to the bank. We'll say to the bank, what are you writing off? So they normally will contribute. So they'll write off a part of that debt, or in most cases, especially if they're very far in arrears and things like that. And then what will happen is we'll negotiate that. And normally the arrangement, because of the persons, and the bank asks a proper income and expenses, etc. They will say, okay, but Mr. Joseph can only pay 1,000 rand a month. And they'll do that AOD over 10 years, sometimes with no interest. So that may be the case.
One of the ideas is to probably reverse that back into and say, listen, let's get another property and reverse that loan.
Exactly.
Backed by an asset.
Yeah.
I don't know whether that's possible, but because they've obviously been they defaulted, it probably won't work. But anyway, we won't debate that further.
Yeah.
But and you can comment on that, Sean. I want to bring in Sean, because I think this is where I think everybody here really wants to know. You know, let's talk about the funding and the recovery process, because I think this is what everybody really wants to know. You know, how do they get back on track? You know, so Sean, I mean, some of the questions like, how does the pre-qualification look like? Or, you know, what do you assess? How do you determine future bankability? And once someone recovers, how to help them to re-enter the system. So taking what we've just said, maybe, you know, we can wound it up into that scenario.
Yeah, so I think if you look at a traditional pre-qualification, so the market takes the customer's income and then all the debt and expenditure that he has, and then gives them a indicative amount of what they can qualify for. I think what we do with the assist group is we take a consumer that has this personal debt, and we say, let's exclude the personal debt, because we know that we're going to get an investor to help him unlock the equity. Yes, he's going to give up 10 or 20% of that equity that we're unlocking as a fee, which is much less than what he would pay with the personal loans.
Yeah.
Then we do an assessment and say, well, at your current rate with your personal loans, you can afford 1 million. But once we do the reassessment, you can actually afford 1.5 million. We put you through a process of getting the debt off your name, recover you in terms of the ITC or your credit bureaus, and then we reapply for a home loan. We might even do a switch for you. So go to another bank that's willing to give you 1.6 million, you know, pay off your investor, pay off your fees, and hopefully you don't get down that personal debt. You know, some people get addicted to it. You get that SMS, you've qualified for 50,000 rand. Thank you very much. I'll take it. Hopefully you've learned from that. But if you haven't, we'll wait another 10 years when the equity is there in your property, and we'll help you again.
Yeah, absolutely. Okay.
Just on that, we do have a program that runs parallel with us.
Yes.
Whereby we will, we call it the financial courage program, where we walk through with the owner and help him to make sure that we don't end up in the same. For us, it's a long-term thing.
Yeah.
It's we don't want to just do this and then you're back in it at a stage. I know debt can be a drug. Really, it can. And we obviously, from our side, when we do a transaction with you, for instance, we make sure that the client during that term don't or not allowed to make new debt, that type of thing, if you want to keep your property. And we don't want people to lose their property because of a simple debt that they now created again in the term, and they'll be upset with me as the person helping you because I didn't help you to actually keep your home.
Yeah.
You know, then it's a frustration.
Yeah.
I just want to quickly, Neil, just jump on the
Absolutely,
on
yes.
sales side.
Yes.
If I can just quickly share that so obviously we spoke about the client that can keep his home, but sometimes a person wants to either sell the property himself or want to sell it, but needs to unlock some equity. So in that case, we call it a joint venture. So the owner will, in that case, provide the property. The real estate investor will provide the capital, and they will agree that so much of the proceeds will go to the real estate investor and the balance to the real estate owner on the end of the day. But buying time, you know, I think it's so important. The benefits here is maximizing proceeds. Even, and my dear estate agents, friends here can tell you that as well. A lot of times you may not be in trouble at all, but you don't have the excess cash flow or capital to actually fix your property and maximize that proceeds. So even if you're in that position, we can help in that case. Fix up the property, spend 100, add 300 or 400 to value, which immediately proceeds, give him better proceeds on the end of the day. It obviously reduces your risk in the process. We stop the legal action, anything like that. We provide that stability that gives you time not to sell under duress, because that's where the problem comes in. That's where you have to sacrifice price. I have to sell it now because otherwise, if I don't sell it, I'm in trouble. And I'm going to lose my property, and I'm going to lose the bit that I'd have in it, and so forth, which we don't want to allow. We want to buy time, and that's one of the keys here. Buy time so that you can sell it in the market, do a proper assessment, make sure that we sell it for the right price, that it's a fixed property that will not be negotiated because of your maintenance that is outstanding or whatever the case may be. So, and I've just used an example here of a client, and you were speaking about the medical cost and so forth. This is a typical client. And he couldn't access his equity because of his age. And now they have medical aid that covered them for so far, and then the medical aid was used up for the year. Now the person had to go through treatment, and they can't. So they had a very low mortgage. If you look at it, 1.3 million rands. They did run in arrears because they couldn't afford the monthly payments anymore. So, but if you take the property is 8.5 million, what is 1.7 million? It's nothing compared to that. Now they couldn't access their equity. It became a real problem. And some credit card debts, etc., and those type of things. So they wanted to spend some maintenance on the property, that they can change some of it in a flat plate, have an additional income. But on the right-hand side, you see the expenses that they had to run in a month, and that type of thing, and their pension didn't cover that, you know. But if you look at the situation where we ended up when we did the transaction, after 2 years, the property will be worth 9 million. It's in the Western Cape area, for instance. So in that case, we were able to settle all the debt, include the full payments for the 2 years, and on the end of the day, gave the owner a certain amount of owner's cash. All that they have to pay now monthly is 2,000 rand a month for the rights usage. Okay, so it provides them enough equity, cash flow in their monthly basis to actually cover that, you know, and things like that is. And as I say, each client has its own kind of situation. This client is in a position where they will then after 2 years, sell the property, downscale. That's a whole plan. Or their children may be interested now to take over that and that type of thing. So those are the type of situations. So just if the key here is every person, we have a team here called Property Solution Team that takes every situation, look at it individually, see what the solution is, offer the solution that we believe is the right advice. And here's the key. We are not, from our side, going to help somebody with a solution that is not, first of all, a win-win. Secondly, that we know if you keep to the plan that you won't, it won't be resolved. So those type of things are what we stand for. And that's the way that we can. So hopefully that will give a bit of a idea of that.
Excellent.
And obviously from Multinet side, where somebody based in our offices, making sure that they look after these clients' pre-approvals, can they resolve it over the term? It's a huge service for us that helps us to determine upfront that we're not taking chances. And I think, Sean, that's for us the key of providing that clarity for the client upfront. Will I be able to buy back? That type of thing.
Okay, excellent. So we've got a quick app over here, which is up here. So we will put it up at the end of the webinar as well. But yeah, there's a quick app. You can just scan it and you could do your full application. So for those of you, and I see there's a lot of questions here. Thank you for all your questions. Please submit more questions and some really, really good questions here. And so that we're going to deal with and discuss with you shortly. But use the quick app. We'll put it up again at the end. I mean, this is obviously, you've got to take action if you are in a position. And I see from some of the questions that have come in that some people are in a bit of a position. So we got from Anonymous, and that's fine. You do not have to disclose your name if you don't want to. And this is a very interesting one. He says, I owe the bank 100,000 full balance owing. So I do know that their lawyers have applied for a court date. My property is worth at least 2 million. I was unable to pay due to a motor vehicle accident. I have money coming into me. How can I stop the process? I'm trying to sell another property. So due to my credit rating, I cannot obtain a loan to spare the amount. I mean, this is significant.
But this is typically, this is what we
see on
experience, and I think it's simple. We definitely can help you. There's many ways. It depends if you want to keep both properties, if this is the client. So if you want to keep both properties, and you can actually do that, we always advise that. Don't sell if you don't have to. If you do, and we think it's the best way, then we'll settle those arrears, pay them up to date, deal with the matter from that side. But we will definitely, on the surface of what you're telling me, be able to assist. Use that scan, do that application, and let's see how quickly we can solve that.
Great. So Anonymous, scan over there. They can definitely help you. So Nkulu Leku, okay, Mazibuko, and says, I've been on debt review for a few years, but have managed to reduce the debt. Now I'm better equipped to repay, but still under debt review. Do I need to first clear my debt review 100% before I can unlock equity, as I have 3 apartments currently, which I'm renting out? So there's 3 properties.
Exactly. So
Yeah.
you can maybe, you want to.
Yeah, I mean, that's a typical example of where there's equity, but he can't access it because of his short-term debt. And I think if he can come through to us and we can tie him up with a good investor, help him unlock that equity, pay off the debt, get him off the debt review, and then he can then reapply for further advance to actually take ownership of that.
And the answer to, should he be off debt review? No, we get you off debt review. We have got specific service providers that work with us. So we'll include all that cost, sort that out, take you off debt review, settle the balance of your debt if there is still debt, because that is far more expensive than what will be paying for somebody that assists you in this case.
This, if you look at the situation, this guy's got 3 properties. So obviously financially it's gone very well with him at this stage. And this is a typical situation where we live in such a dynamic life, and situation where person's situation will change from one day to another. And that is why it's so good to team up with people that is professional and that is adequate to assist you in situations like this, and just make sure that these guys are there to assist you to get these situations sorted out. And you can trace that with 2 questions, 3 questions, know exactly where you're going to find this and sort that out. Yeah.
Excellent. So Nkululeko, we can certainly help you out over here. Once
Call
again,
us, please.
yeah, so please give it a shot. So right, next one from Louise. Does this apply to sectional title properties? Absolutely. I think it applies to any property. I don't know if anybody, I mean, the sectional title.
Except vacant land
Yeah.
is unfortunately something that we don't deal. We if it's really prime, or maybe on Clifton Beach or somewhere, something similar, or value is very high, it may be considered, but I would rather say that's the only thing that we struggle, because obviously vacant land sells much more difficultly in the situation like that, if we need access to that type of equity, and we can't unlock. There's normally also not an income based on it, and things like that, which make it more difficult to assist.
Yeah. Okay. Very good question here from Tabisa. And do you have an age limit on your assistance? Do you help pensioners? And do you have to be working to be assisted? I think very good question, because the banks, once you turn 60,
I like that.
once you hit 60, you are almost persona non grata. But your thoughts on that?
Yeah, okay. It's a very good question, and it is also a difficult answer. And that is that, depending on your personal situation, there is solutions for that to unlock equity.
Yeah.
Without, if your property, and this is the key, you see, maybe you want to leave your property for your siblings or whatever the case may be, then you are in a position that you say, but how long lifespan have you got left? We don't know these days. You in the USA and other areas, they use what they call a reverse mortgage. Okay, and obviously we can do something very similar, but from a perspective that you must be prepared to sell your property and actually maybe have a usufruct on that property for a certain timeline. So there is solutions for it. It's just not as simple as a straightforward assistance. And in those cases, I can only judge that on merit after the client has applied.
Okay. That is so true. If I may just give 2 seconds here. Every sale is so unique. Like you just said, how long the age limit.
Exactly.
Somebody can die, and somebody's dead, and the age limit is still going. The guy is dead for 2 years, but we're still busy with the property. So there's really no age limit, because the property has to be sorted, the situation has to be sorted. So you have to assess the situation.
Exactly.
And this is where, when the second generation people come in and say, listen, are we going to buy this back? Can we speak to the bond originator? What are we going to do to tackle the problem? And this is such an interesting point. That
what is right about, though, is the fact that the banks won't look at you as, so if your exit strategy is going to be a mortgage and you're over 60, you have a problem. All right. Because if you qualify and you have an income that's high enough to do a mortgage for 10 years, yeah, sure, you can do that. But if not, in that case, then we will look at alternative ways to assist you in that. But as I say, it will be on merit. And we can't help everybody with that. Our credit committee is probably the biggest challenge with that. I motivate those deals often, but I only get like probably about 10% or 20% through on that basis.
Okay. Nkululeko again says, can I unlock equity to use to cover and close high interest debt and move out of debt review faster? Is that an option?
Definitely. We do that often. Consolidate debt. If you remember the earlier slide, consolidate debt. This is ideal for you to get out of debt review, get your credit score back to normal. That's the key of this. I think that's a simple answer. Yeah.
You know, one of the things that that come to mind is a lot of people say, "But I don't have equity." But you could have a family member, maybe someone that's retired, that has equity, have a property, and you could then use that property, as long as there's consent, of course, from your grandmother or your parents, to unlock equity in that property to cover those personal debts. So you might not be a property owner.
Yeah.
But because your family members have got property that's been
Or
paid
they
off.
may be a property owner with no equity.
Correct.
But your grandfather, your mother, or whoever owns a property where they own nothing on, and maybe you just want to breach that term for a period of time, address your arrears, sort that out, your short-term debt out, get yourself recoverable, and then when the time is right and your property have grown, increase your mortgage again, pay them back, things like that. Yeah.
It's also an income generating for someone with property that doesn't want to rent it out.
Yeah.
So you could, but there is a risk. If the person defaults, you are responsible. It's your property.
Yeah.
So very, very risky, but it is possible.
Great. So once again, I think there's an app over there, you know, is to just do the application and consult with the assist team, the real estate assist team. So Umfuleni says, the gentleman says that they can't loan you money. Okay, please clarify, how do you really assist?
We find people that can actually get the money to be able to loan you. We don't loan our own.
All right. So the secret is the word lending. When people are in distress, impaired, even people with lack of enough income, no bank can give you money. No institution can lend you money if you're not in the affordability gap of that specific loan that you want to make. So we do structured property transactions. That means, for argument's sake, you sell your property to the investor, but you do immediate buyback on an installment sale, which means that on that first sale, you unlock the equity. So if your property is worth, let's say you owe 5, or like, let's take our previous client, he owes 100,000 on that property. So he sells that property for R1 million, unlock the 100,000, maybe fix a few other debt, do whatever he needs to do. But he immediately buys it back on an installment sale basis, for instance, or rent it and then take transfer of it back in a certain period of time. So it will always be, and this is something which you have to be very clear. You cannot unlock money through lending if you are in arrears. Nobody is allowed to lend you money. It is, if they do that, they do it illegally. I can tell you now, because if you are already impaired and you are owing money to lots of people, or in arrears, or your debtors, or you're overexposed, that person that lends you money must know that they take the risk that you don't have to repay them. You know that. If you don't repay them, you can just say, sorry, you were not allowed to lend me money. So it's reckless lending, guys. So that's why the National Credit Act is there. But there is a way, and that is by a structured property transaction. So if that answers his question, hopefully.
No, absolutely. So another one from Anonymous, and I think, Sean, it's probably you can answer this one. How do you then unlock equity in the property even before it goes to the arrears?
Okay. Yeah.
Well,
Even before it goes
before.
So what you're saying is when he starts,
how do we
going in
unlock equity out of the property? So, I mean, there is a
like,
process.
again, whenever you do a further advance by the bank, you go through a new credit process.
Right.
So the bank will assess you at that point. So if you're already in the process of losing a job or you've lost your income, the banks won't give you finance. So even if you're not in debt review or you haven't defaulted yet, but you know next month is going to be a month that you're going to start defaulting, the bank will assess you on a new credit profile. So your further advance is a new credit.
Yeah.
And at that point, you would have to then go through a process of approaching the assist group, having a look at what you can do to restructure. It's better when you do it earlier than later.
Yeah. In actual fact, your cost, the earlier in the process, we always tell the client, the real estate owners. The earlier in the process you identify the challenges, maybe you just lost your job. You got some money that was still on the side covering your mortgage for a month or two. But now you know for a fact, if I haven't got a job in a month's time, I'm in trouble. Okay. So the time is not to wait till you're in trouble. The time is come now, say, listen, this is my situation. What can you guys do for us? So I can use this as example that you said, so let's say you've lost your job. We have helped many clients that there's equity in their property. We do a transaction, give them time to find a new job and sort out their credit score, the proof of income again. And as soon as that's done, we do the repurchase or whatever the case.
But I also, the way I understand this is somebody's looking to say, well, I've got a property. Okay, I'm not in arrears. How do I unlock the equity? So it's kind of like, what is the process?
So
Yeah.
even in a normal situation, let's say you've got an opportunity here where you think you're going to make a huge amount of money, as long as it's not carousel or what do you call the other one here?
Oh, you took about they gamble.
Yes, yeah. So we're going to ask you what you need the money for. So
Yeah,
if
don't
it's
gamble
gambling,
it. Don't gamble.
trust me, we will not give you the money. But the concept of it is that when you can unlock equity to do something else, maybe there's medical bills, there's something like that, what you have to cover, and that we will definitely then do it either prematurely before you're in trouble, that type of thing. We'll do it in time on this exact same basis.
Yeah.
There's no difference in the methodology.
No.
It's just the earlier timing, less cost. You don't have attorney's costs now and all other summonses and type of stuff that push pressure on the situation.
Yeah, so typically they're going to do a proper evaluation of the property, see how much equity is in there. And of course, you would, through a mortgage originator like yourself, you would go to all your banks and get the best deal.
Well, look, when you with your existing bank, go to your existing bank,
right,
to restructure that deal.
Okay.
Yeah, so we won't go to all the banks.
Okay.
Just coming back to the valuations. Normally we are on the bad side there, because the tiny ones 2.8 million because of all the debt, and the house is only worth 1.8.
Yeah.
And then it's a bad.
Yeah.
Sometimes I have to ring that to explain.
Yeah.
It's not always the situation there. And that's where you use this kind of facility to explain to them the value is written, what it is. This is what we can do. This is the equity that is available.
Okay.
And I think looking at the whole picture is always the key. You may be here in a situation now, and that's why it's so difficult to, it doesn't cost you 1 cent to apply. It doesn't cost you for us to give you the solution with the cost and everything. I think that's very important. We do that full assessment, everything there, and then we are in a position to say, this is the solution that we can give you. And then it's an open decision to say yes or no.
Yeah.
It's no force,
Excellent.
nothing. No.
Tando asks, will you share costs of such services that you normally offer?
Yes, exactly. So what we will do is, obviously each solution is different and cost related to that type of transaction is different. The value of the transaction determines the cost. The exposure to market value will determine the cost. So all those type of things, it's very difficult to tell you now this is going to be so much. But the nice part of it is when you apply, we give you a breakdown of every single cost that will be involved in the transaction. And you know that upfront without paying anything. Okay, so we're not going to offer you something which you're not going to know what you're going to actually cost you. And we will do a proper breakdown with you, run through it in a consultation so that you may make sure you understand it 100%. Then we leave the choice to you.
Right. Go on the quick app. I think there you can do the application. Noah, and I think you've actually covered this question already, but I'll raise it. Good evening, everyone. Are you able to help people that have arrears that are more than the actual debt? Money that I got for finance. We use that example now of the 8.5 million rand out. Maybe you just want to elaborate.
Yeah, I think, look, when you owe more money or the same amount of money or slightly less than what the value of the property are, and there's not going to be any equity that's going to come out of it. And this I have to be very careful in how I state it, but that I'll use the outsurance approach. You will always get something out. Okay, so that is a fact. And the way that we approach it, we will do a transaction for you, even if you owe more, and you will still get money out. And that is just pure by dealing with the banks directly on the arrears, how we need to approach it, etc.
Excellent. Ladima asks, I am a pensioner and would like to access equity in my fully paid off house. I plan to finish outside rooms and derive income to both settle debt and avail some finance for myself.
Yes. So in your case, there's a few questions which we will ask, but I would like her to rather approach us so they can get the full picture. And then we will look at, for instance, has she got children? What is the plans in the future with the house? Do the children want to, does she want to leave that property for the children? Do they all work? Don't they work? Can we utilize them, or doesn't she want to involve them? All those type of questions are questions which we'll ask during the consultation to make sure what kind of solution we can give her for that.
Okay, excellent. So once again, I think there's the quick app, Ladima, so please go there. All right, so we've got a question from German. It says, I'm self-employed.
Oh,
and the banks or SA home loans won't give me a home loan. What can be done?
Okay, a very good one.
Yeah, maybe let me get in there. So self-employed customers are always, they want to show the revenue service how little they earn, but they want to convince the banks how much they earn. Yeah. The best thing to do there is to approach us as a company. We evaluate your financials. We evaluate how creditworthy your business is. And if we need to, we can assist you in actually getting your books corrected, so that once we go to the bank, we can then, have the right financials for them to actually approve the loan. So that's what we do for self-employed. It's actually a fantastic service. So we first assess their books, we make sure we fix it, and then we go to the banks.
Well, what we do then in that same time, and this is important, so we can play a role in, if you don't necessarily can wait now to unlock certain equity, we do a transaction where we unlock the equity, then put you through that process which Sean was talking about. Then when you're ready, take back the property in that case, settle the debt, or the equity that is unlocked in the process, and that way we breach that time. That's actually what we do.
Okay, excellent. So once again, just go on the app there, and certainly they can definitely help you.
I just want to just add something to my point here. He said the people that are self-employed. Some people start a business 2 months ago and they want to sell it, they want to make money. There must be a financial preference. People must be doing business for 2 years, I think, Sean, before you can actually look at this. And again, when you get family members and people that has got finances, that is willing to help you, we can have a look at this. But you can't be busy with a work, with a job, and have a business for 2 or 3 months and think you can get money in there. Unfortunately, the risk factor there.
We buy up to, if there's something that they're busy with, we have a specific product for that called a for sale by owner product, which gives them time. So normally they can then buy time for a year. I think, what is your normal criteria, Sean? With
the bank will look at a business a year is early, but they would look at it, as long as the finances are there in the industry that it's in and can show that we're in their accounts. That'll do a good work.
Okay. So normally we would have a minimum of a year, but pushing 2 years, preferably.
Excellent. Tamara asks, correct me if I'm wrong. This sounds like it's more advantageous for the homeowners and not the investors.
No. It is not true, because because you do a transaction for a lower value. So I'm going to use an example again. Let's say it's R1 million property. We do a transaction for 500,000. the effective returns for the real estate investor on the end of the day are substantially better than they can do at any buy-to-let transaction. Okay, because you're going to either pay a rent or a installment sale payment, which gives you an income plus a capital growth of 5% per annum. And between the two, you're definitely going to do substantially better than any other property investment. And we've tested in the market often. So the investor will win, but you as the real estate owner will definitely win as well. But it is the point, and this is very, very important. We do not allow the misuse of people's impaired status or whatever you want to call it. We don't allow investors to misuse that. We are here to help people, but at the same time, the investor must make a good return. That's the win-win situation which we talk about.
Correct stuff. Okay, so once again, we can go to the quick app and do the application there. Joy in Sydney Fuller asks, good evening. I have a home valued at 2.5 million rand. I owe 150,000, but I'm in arrears and under pressure from the bank. I am working, but my husband is a pensioner. Are you able to assist? We cannot get a loan to consolidate and also add flatlets on our property for retirement income.
What is her age?
Well, I would assume probably just under. Let's make an assumption that she's under 60 years old, because you turn a pension
then
when
we
you're
can
60.
definitely, yeah. So then we can definitely look at the solution and unlock equity to build it as you want to add units to get income. Sounds like.
Yes.
We have a lot of those kind of applications, and definitely can look at that now.
Okay, excellent, great. So there is, once again, just do the app, do the quick app.
I just think it's important that Sean under the shows maybe can add to that, where we, for instance, if we built the units and we got the leases, okay, on those units, again, that counts for adding to your income from the institutions to actually qualify them. So it adds income to that. So we take that in consideration beforehand, and that's where the pre-approval, when we look at it, say, okay, you're going to have a rental of this, you're going to have that, you're going to have this. Are you actually going to qualify then to buy back? If we can't give you more than what you can qualify to buy back for, because that doesn't make sense. Then you're going to be angry with me. So, yeah.
Excellent. Good. We've got Vela says, good evening. My bond is paid up, but would like to make renovations in my house, but I'm not able to get a loan from the banks due to low credit score. Are you able to assist in this case?
Yeah. As long as she's prepared to work with us with a financial courage program, fixing a credit score, all those type of things, perfect.
And it's so sad, Neil, because there's so many consumers out there like that.
Sure.
Again, they probably
Crazy.
had incredible high personal loans, couldn't get out of it.
What I realized, lots of people do not know how to work with finances. And lots of times when you come to a client and you actually just explain very basic things, you can actually resolve a lot of issues by just explaining basic.
That's our recovery financial courage program is exactly that. To give you a few basic principles of how to run this instead of make it. And I don't want to blame the banks, but that short-term debt kind of ratios that you saw on the previously is a challenge for me, because I don't think people they haven't educated the client on this situation enough, maybe, that this happening. So they didn't. It was much easier, slightly longer process to actually go and get a mortgage at substantially less monthly payments, much lower interest rates. And clients were not assisted with that. They rather would assist them at a higher interest rate for a much higher debt settlement and things like that, which is good business for the bank, but until the client can't resolve the problem anymore.
Absolutely.
Yeah.
Kululeko asks again, debt is written off, but in the background, Where does it go?
The debt, it gets paid, and we will negotiate the debt and settlement of it. We've got specific people in that we subcontract to, which are specialists in this area. So they will negotiate the debt, etc. So we'll include it in the equity. So it's not a question that you don't pay for it. You're definitely going to pay for it, but you're going to pay substantially less on what the actual amount is that's outstanding, which is important, because you get a discounted amount. You know, so you get discount on that because you pay cash for it. So it will save you a lot of cost on the end of the day. I hope that answers that question.
There's another question there. So when debt gets written off, eventually the bureaus take it off your name. So there was a couple of years ago that the bureaus had to clean the data, and past debts that have been, prescribed via the legal system had to be taken off the bureau. But remember, the banks still have their own scorecards.
Exactly.
And the banks still remember that you didn't pay me back. So even though it was off there, your credit score is always two ways. So how you treated the bank and how the bureau see you.
Yeah, it's very true. No, it's very
Sometimes
true what he
doesn't
says
really
there.
disappear.
So what I can say is you probably won't get right with the same bank, but with the other banks you will.
Correct. Neil, we'll have to do another webinar because I think these questions are...
Yeah, there's still 9 questions. And I think just to be fair to the audience, we will continue. I assume everybody's still on. Thank you for your questions. And I think we should have started a little bit earlier with the questions.
I agree.
But let's continue. And thank you. It's really been fantastic interaction over here. So Tando asks, I'm under debt review, but doing payments by myself now. Can you assist in such instances as well?
Does she have a property is the first question.
Yeah.
If you do have a property and there is equity in it, then we can help you with that. Obviously, based on seeing what your total picture look like. That's actually a key. Without information, guys, you'll see there, when you go on the full the quick app, there's basic questions that we ask. We can literally, if I have that, we can literally in principle tell you, yes, we can help you, or we can't, and there's seldom people that we can't help. But the biggest challenge is that we may be able to help them in a way which they don't like,
Okay.
And that may be the case.
Correct.
But then that's a choice for them.
Excellent. And Suaki says, I have an outstanding bond of 500,000 rand on my property. I'm in arrears because of a labor matter between myself and the employer. I cannot access my pension benefits until the matter is resolved. I'm using my property for rental, but I don't have enough tenants to be able to pay the bond and maintenance for the property. What can I do?
Do you have, first question will be, what's the value of that property compared to the outstanding mortgage? Is there some equity? Then we can do something.
Excellent. I think short and sweet.
But also another agent to help get a place full of tenants, because obviously if it's not tenant, then she has no good agent.
Yeah.
That's another thing she could look at.
Absolutely. Okay, thanks for that as well. Inka. And then we've got Vitoa. She says, how do you know if your property has equity? My sister has a flat in Cape Town, bought it for 450K. Now, according to the agency, say value is 800K. I would have thought it's more than that. After 10 years in Cape Town, the property market has picked up
a lot of properties that's worth 850K in Cape Town.
Exactly.
So I think it's probably worth more. But
I think absolutely.
That's when you get an agent again to go and do a CMA for you. So that you know where you are, and then you can evaluate the equity you've got there. They're very easy.
Absolutely. So there's opportunity there, Vitoa. Absolutely. So go on the app, reach out to the guys at Real Estate Assist. So Adrian asked, the bank will not loan me via a mortgage as I'm 75. However, I have rental income as well as several annuities. No salary slip and age limit together exclude me from any bank loan other than a personal loan. Any comment?
I think the key is we just assisted the client. What any will tell me, I think the age was 75.
Correct.
In this case, the person had more than one property. They do had a specific transaction out of which they foresee that they can, a business transaction where they can get the money to pay that. And in that case, if they don't, then they agree that we will sell the property within the term, and that type of thing, but it will unlock the equity in the meantime. But again, depends on the situation of the client, the full picture, and we'll see if we can assist him in what way we can.
Okay, good. All right. So Nkululeko asks, what fine print or legal info do I need to consider when looking at this JV journey?
Okay. So it's very simple. You're not going to be, well, first of all, our process is simple. One, we give you what we call a deal solution presentation with all the figures on it, everything with it, the major terms and conditions. That's as a mandate at the stage that you make a decision, you know the cost up front. Yes, I want to proceed. When you give that proceed, we go to a risk committee, we do the transaction, we get it approved. After it's approved, you'll get all the documentation provided for the transaction up front. You'll have a consultation with our principal, with the PPRA. We registered with the PPRA. He will have a discussion with you, make sure you understand the agreement. You can take it to your lawyer. You can take it to anybody. We don't have a problem with it at all. In actual fact, we advise it. And then you can work through that contract. And if you're happy, then by that time, you will sign the necessary documentation.
Excellent. Mfuleni asks, and it's a nice one. What is the turnaround time? Because sometimes the situation is very urgent.
Yeah.
Yes.
Yeah, very good one. Okay. So we have a SLA timeline that we work, and Henny is going to look at me here, our operational manager, and say, please just be very conservative, Daniel. I like to say we would like to keep to the situation of the SLA. And if you provide all the information, this is the key, and I must emphasize that. If you work together, you provide the information that we require, we can do what we have to within 35 to call it 65 days max before. And if it's more urgent, like an auction, we can literally do it in 2 weeks. But that is a rushed process, which we don't want to do. But if your property is going to be saved from an auction, we'll definitely do that.
Excellent.
Then we prioritize it and we squash everything into a short time. But I think a realistic time is 6 weeks.
Excellent.
To
Good.
do everything up till the date that the money will then only be available after that.
Right. So I'm just conscious of time. I've got 2 more questions over here, which I'm going to deal with. I'm then going to ask our panel just to give their final thoughts, their final wrap up before we go. And I've got one from Anonymous. Hi, we have a property with arrears for 50,000 Rand and no income to service the monthly bond installment, which is a bad position to be in. The valuation of the property is about 1.9 million. And should we go on the restructured deal, will you be buying it at what value? The balance on the loan is 500,000 Rand, by the way.
Okay, so the first question will be, if you got no income, what is your age? Are you able to get another job? How much time do we have to buy for that? But do you believe you're going to get a job within the next 6 months to 9 months? Then we can assist you again with that and look at that. But we will look at your qualifications. We will look at your previous incomes, things like that, not to give you a false hope and getting a job and then you don't, and then we could have rather sell the property up front. But with what you owe, you probably can't rent it in any way somewhere else. So there need to be a solution for that.
Okay, excellent. So Anonymous, I think, once again, apply on the app. Our final question. So thank you very much for your questions. I think it's been really awesome. It's from Roger. And Roger says, my 2 sons and I own a property investment company, and we own a 2-bedroom apartment as a short-term rental. The apartment currently has a modest equity value. Would like to unlock this equity in order to purchase a vacant land and build a second short-term rental. Is this possible? Are you able to assist?
If the equity is enough, I just want to clarify that there is a maximum exposure to market value that we work on, which is normally about 75% of market value. So if there's equity between that and your current mortgage. We will assess that by proper assessments, professional valuations, etc. We don't just thumb suck things. And then on the end of the day, we'll determine how much we can unlock. And if that's enough to do the job, because we can't give you money for half of the finished job for the properties, to rent it out or whatever, you have to have enough to finish the job and make sure that it can actually be done. That we also do through proper quotations. You must show us that we can actually finish that buildings or added buildings or whatever that is. Our national maintenance manager look at those quotations, make sure that it's executable, and those type of things.
Excellent. Great. So what I'll do now, I'm going to start with you, Sean. Maybe you've got a minute just in closing, your final thoughts. Maybe leave somebody with some wisdom that they can take away and utilize.
Yeah, maybe on wisdom. You know, if you are going to take out your wisdom teeth, you're not going to go to a mechanic to do it. So, you know, if you're going to be looking at refinancing properties, looking at doing deals, looking at structuring, however you need to when it comes to financing property, speak to the experts. You know, we help with the finance side, and the assist group helps with structuring the deals.
Excellent. Okay, that's Sean Rodemae, the CEO of Multinet. So first of all, your final thoughts there, Henke.
I must tell you that this is such a unique situation where we can actually help so many people in the industry, where we as estate agents can have an extra tool to get people back on board, because people out of the finances is people that we are not benefiting from our daily situation. So if somebody is not in our economy, we want to get them back into our economy, and this is a brilliant road to get them there. And yeah, again, I do agree so much with Sean. Get a person that knows what they're talking about, a person that knows what evaluation is, like somebody that knows what finances is. Just get yourself educated and make sure that you make the right decisions and make use of us. We are here for you guys. Yeah.
Excellent. That's Henke Milan. He is from the Pelsa Real Estate Group. So thank you very much, Henke. And then, of course, last but least, Daniel, just your final.
Yeah, I think just to summarize, I think every situation is different. I really believe that it doesn't cost you anything to find out if we can assist. We'll be very honest and very truthful if we can't, and in which way we can, I would rather say. It may not appeal to you, maybe, the solution, or it may. And I think that's the key. You know, if you don't ask for a solution, rather ask, and you know what the outcome's going to be in the potential future for you, than wondering and lose your property in the process, lose your equity in the process. All those type of things is not necessary. Those are the stories we don't want to hear. We want to hear the stories of all the people that bought their properties back at discounted values, now have their finances sorted. And that for us is long-term solutions for the real estate owner on the end of the day.
Excellent. Great. Flat on story is 8. It's done.
Thank you all for your time.
So first of all, I think let's just close with this. System really moves fast when you fall behind. But you still have more control than you really think.
Exactly.
So the difference is timing and taking action early. So we've got the app over there. So I want to thank the panel again. It was wonderful it was a great chat. And I think thank you for all your questions there to the audience. If you really need help, use that quick app, but move quickly, start now. Don't sit back. If you're sitting in a situation and you need assistance, you've got the guys out here that can help you. And I just want to thank everybody for joining us this evening. And hopefully we managed to assist you going forward. Please reach out, as I say, on the quick app to the Real Estate Assist team. And once again, thanks to our panel. And until next time, I'm Neil Peterson. Thank you for joining us and have a great evening. Thank you.
Thank you.